Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 19th of October. All right, now I really like it when a plan comes together, or maybe it doesn't, right? No sooner had I started talking about the bonds and there was a bit of a disconnection with what was happening on the dollar and the bond market, and the US bonds kick into gear again, right? So the US 10-year Treasury yields hit 16-year highs, right? Now, this isn't like crazy because we are seeing significant like moves in the bond yields, but the dollar still isn't really shooting to the top side like you think. I still think it's overcooked, but and there's a couple of other anomalies here, right? And this is the sort of stuff that you either use a bit of experience, a bit of gut feel, or whatever you like to call it. Because what I'm talking about is there's a couple of other things coming out this week, like all these various Fed officials, right? Like Fed Bank of New York President John Williams said interest rates need to stay high for a while to get inflation, not for a long time, just for a while, right? But this is a little bit different to last week's Fed, where the Fed stooges came out and were doing a whole bunch of things, right? So Fed Chairman Powell, several regional presidents are due to give comments, okay, before the Fed officials enter into a blackout period on October 21st. So this is where all the various Fed officials get to say their word, right? Then we'll hear what's going to happen from the top. But the core theme, right, is it's like a little bit of a flip. Now, you're going to see this change during the various sessions, right? Let me just move that calendar. So let's just have a look at exactly what's happening here at the moment. Okay, prices are lower, right? What that means is yields are higher, right, on the bonds. I mean, these bonds are like through the roof. As I said, 16-year highs for the 10-year. Now, you look at the equity markets, a classic risk-off scenario, okay? It's sterling's not playing the game here. Euro, Aussie, and Kiwi are heading down. You know what? There's a bunch of US dollar pairs here that are sort of moving the other way. Now, this is actually, I think the FX rates have just been reset, so that's probably not a good indication. But check out the pressure on the equity markets, and you can see it very clearly on the charts if you're looking at those. Commodities through the roof, right? This whole Middle East situation is putting upward pressure on commodities, obviously oil in particular. Now, if I just come across here to the charts, I just want to sort of run you through a couple of bits and pieces before I go back to the data. Like, you can sort of see clearly on your charts, and I've had a few questions about this, how do I set up my charts? Well, when you go in and do your analysis, right? So I've got the dollar index here, right? I'll shrink up the data so I can see exactly where that support trend line is. And in this situation, we've got the start of a new resistance trend line. You can see it's just poking through that. It's sort of like 2 or 3 touches. You know what? I'm just going to change the color of that to orange. So I know it's sort of weak, but that's the only level we've got to work with. Now, once I've got that profile, make it easier for yourself when if you've got a bunch of charts on a template like I do, right? So what I'll do is I'll blow that chart up so I can see very clearly the levels. And you want to do that, right? So if I'm looking at the Aussie dollar, for instance, okay, it is in a downtrend. You can see that very clearly that this is sort of going down. We've got numerous touches here on the trend line. As I keep saying, close enough is good enough. And we've got this level. Now, this is starting to build up nice pressure. It was a little bit alleviated yesterday or in today's trading because that move in the bond market supported the stronger dollar. You saw a lot of these instruments roll back. But once again, once you've done your analysis, there's no need to have the big picture, or if you just like to see where it's come from a little bit more, because when you come back and you shrink down your charts here, right, you can see a little bit better. Okay, it's very clear to your eye that this is going down. I've got a resistance level here, a support level here, and it's easy to see what's happening, right? Same as the dollar index. And you should be doing this across the board, across all your pairs, and it's going to make just basically your analysis or interpretation when you come back and have a look. You can see exactly where the major trend is. So if I shrink euro up, right, it looks completely different to the way it was before, right? Trend down, now trading sideways. We're looking for the next big move, whether it's up or down, and we are getting that pressure build up. But it's not consistent with the dollar at this point because we are starting to see, I'll just change the screens again. As I said, variable movements here on the bond markets. Now, the cycle of these moves, right? The price is down in the North American session, bond yields up. Now, during the Asian session, you'd expect to see that roll over a bit, back the other way, like a bit of pressure off. Probably prices go up and the yields would just drift off more. It's clearly obvious from what we've seen today in the market that the North American session obviously is the key to obviously the US Treasury yields and what's happening globally. Now, this is no different to what can happen a lot of the time, where the central focus for the global markets is the North American session, in particular the US. You're going to get the specific moves in the equity markets that could possibly flow into the currencies. An event like the Middle East situation, definitely flowing into the commodity market. Now, why am I telling you all this? Well, you need to be ahead of the game, right? If there's a situation where things, obviously it doesn't look like things are going to turn around very quickly in the Middle East, but if they do sort of come to some ceasefire or some agreement, commodities you'd expect to turn around very quickly, right? And potentially the equity markets, well, that's probably a bit more related to what the Fed officials are saying, but we will keep a very close eye on the bond markets as well. See if there's any connection here with the events. The Middle East situation, commodities definitely feeling the benefit of those moves. All right, so a little bit of a sort of coaching session there just on what you should be looking at. Now, let's just have a look where the what's happening on the fundamental side of things, because when we do look at the markets here, right, the building permits and housing starts, you know, no real major variance, right? Nothing to throw the dollar off its sort of equilibrium at the moment, right? The bond markets, yeah, sure, they went up. That's putting a little bit of pressure on the upside of the dollar. But once again, if I just come back to the charts just quickly, if you're having a look across the board here, the dollar, you know, even with the 10 years hitting 16-year highs, yeah, the dollar index has gone up a little bit. Dollar Swiss came back a touch, but not much. Euro just drifted lower. Sterling actually moved a little bit further, about 60 points. Aussie back down about 40 odd, 50. And Kiwi really liked it lower, and the dollar went up against dollar CAD. Dollar yen, the sleeping giant, as I said, that will come back into focus once this Middle East situation is out of play. But bond yields push the dollar higher, but it's not like we're breaking new highs across the board here, right? So just I still think that we may have a chance of seeing one key event will flip the dollar over, right? And so that's where we're going to connect the dots, right? So let me just come back before I lose my train of thought. Okay, so looking at the data, not a lot there to sort of convince us whether well, definitely not to sell dollars. The crude stocks, I'll tell you what, the numbers here suggest oil is going to remain consistently high for some time because they're starting to rip into the US stocks. So keep an eye on that as we go forward. We still have a bunch of Fed officials speaking due to come up, but coming to sort of today's trading, right? It's another day, right? So put it that way. We know what the US bonds are doing, right? Now it's time to sort of focus in on, say, the Aussie unemployment, the Japanese data. I wouldn't be worrying about that. You come into the North American session, Canadian PPI and raw materials, right? That could be something for us to grab if we see some sort of level of variance there. But then you come down to, once again, where the bond yield direction is coming from, the North American session. So let's keep an eye on the initial jobless claims. We've seen a $10,000 variance here, or $10,000, 10,000 person variance impact the market. That could do the same thing. Philly Fed manufacturing. Then you've got the rest of the Philly Fed numbers, existing home sales. And then most importantly, we've got Jerome Powell speaking. Now, this is he's got different weighting to the rest of those other Fed officials. Now, not all of them, actually very few of them actually have a vote when it comes to changing interest rates. But I tell you what, they all get to sit on their perch and actually tell you what they think. Usually they like to contradict. The ones who don't have a vote like to contradict the chairman. The ones who do usually like to follow what the chairman's saying. But this is more important because we actually get to hear from the horse's mouth. In this case, Jerome Powell himself, right? That's going to be a major focus, and there may be some flow-on effects there. In my experience, with a major geopolitical event still in the wind, they wouldn't be too aggressive, right? But they're going to start thinking about, well, what's going on here? What state? They've sort of, the US economy and the Fed, they are constantly sort of in damage repair. And what I'm talking about is it goes from one thing to another, right? If it's not the equity markets going through the roof, it's them going through the floor. Bond markets now going through the roof. They know that their comments about interest rates maybe remaining high for an extended period is going to keep this upward pressure on the yields, right? But they also know if they say something like, you know what, we're close to the top or we're at the top, those bond yields will crap out and we'll see a massive reversal of everything, right? The yields will fall, the US dollar will fall, equity markets should go through the roof, right? That's what you've got to be anticipating and waiting for. So you don't need to trade every day. We need to see how things are lining up. And that's why you need to listen to Jerome Powell in case he does come out with some blockbuster information about what's going on with US interest rates. Don't forget some of those other officials that I was sort of talking about there. I think it was Williams. You know, these guys are sort of saying, yeah, that they need to remain high, but, you know, for a while, right? They're trying to sort of manage the market's expectations around how long these interest rates are going to remain high for a while. Like, what is a while? Is it a day, a week, a month? We'll see. But Jerome Powell will hopefully give us the more updates. Don't forget, we've got Joey Biden over there in Israel at the moment. I don't know if that's going to help things, but he was just sort of saying to Iran, if you're thinking about joining in, don't. I don't know if that's scaring them, but anyway, strong words, Joey Biden. Anyway, all the best, guys. Lots to look at. Try and focus on what makes sense to you, right? And that's why I've got these sort of templates here with the global markets, and you can sort of really see exactly how everything's connecting and impacting. All right. Good luck, guys. All the best. Cheerio.